Okay, market is about to open. Off rip on the 1 day time frame, we can see price rejecting off of this 1 day bullish fair value gap. And granted, this candle still has, it's a 24-hour candle. By the time it closes, it could close down here, candle body down here, disrespecting this bull fair value gap, or it could close up here, heavily respecting it. We don't know, but as of now, we are respecting it. So the reason why I'm going to put some weight on that and take that into account for my analysis, even though the time frame has not fully completed, is because in relation to ES, right, the correlating pair, ES is up here. ES has already broken out of this bull flag. And again, I don't trade patterns, but when you see it on a very high time frame, like 4 hour, 1 day, you can't help but, at least acknowledge it, right? You're not going to take a trade because of it, especially on this high of a time frame, but you can acknowledge that there is a bull flag and patterns exist for a reason, right? But you shouldn't base your entire strategy off that. So in relation to NQ, ES is up here. ES is already broken out of the bull flag, and it has a high time frame wick on the 1 hour and 4 hour, rejecting off of the buy side bearish trend line of this bull flag. So this is, I guess, the bearish trend line of this bull flag, and ES is rejecting off of it. So that rejection is in the same key level as NQ rejecting off of this 1 day bullish fair value gap, which is why I think that by the time this 1 day candle finishes, it'll be a completed rejection off of this gap. And, from that point on, it might be a potential continuation for tomorrow. Now, to substantiate that, we have a 4 hour and a 1 hour bullish SMT divergence, right? In relation to this 10 a.m. low from Friday on NQ, ES has not taken it out. ES is ascending while NQ is descending. So NQ has taken out that low, also being in that 1 day bullish fair value gap. And prior to this price action here, we had a bearish SMT divergence here. Now, an SMT divergence on a high time frame could mean one of two things. It could mean that price is temporarily pulling back into a discount zone to then continue in the dominant direction, which from what I'm seeing, the dominant direction is bullish. So when I saw this bearish SMT, I'm thinking it's a temporary pullback into a discount zone, grabbing liquidity, then continuing in the dominant direction, which is bullish, right? Or an SMT could mean that we are long-term going to tread price in one direction, which depending on what time frame you trade, if you're like a scalper, you only trade 30-second, 1 minute time frame, then I guess to you, an SMT on the 4 hour, 1 hour over here, you could enter some short positions in this sequence. But from my strategy, right, I'm gonna start on the high time frame, draw down to a small one, and then ultimately enter off of a low time frame, like 1 minute, 2 minute, 3 minute, maybe 5 minute. So when I see this for my strategy, this looks perfect because a bearish SMT pulls back into a discount zone, into a key level, right, a 1 day bullish fair value gap, and also a bullish SMT divergence. So now what I'm looking for is entries, and I'll start on the 30-minute. I had this 30-minute bearish fair value gap marked once the 8:30 a.m. candle finished, and I was thinking maybe the 9 a.m. candle, maybe the 9:30 a.m. candle will break out above this second candle in that bearish fair value gap sequence, which would prove this fair value gap invalid, and because we'd have inversed it. And for me, the second we inverse a fair value gap, that is my confirmation. Now, it's unreasonable to look for an inverse on a high time frame like 30-minute, right? 30 minutes a pretty high time frame for entries. I like to enter on 5 minute or below, ideally below. So it's fair that we haven't broken through the candle body of the second candle here, right? We clearly respected that 30-minute bearish, and we've taken out the low on the 8:30 a.m. candle. So now what I'm looking for is that on a smaller time frame. And I don't mind a price starting bearish with market opening because this will always happen. AMD, right? Price will accumulate, it'll manipulate, and then it'll distribute. So accumulation is, you can think of it as consolidation. That'll happen in pre-market, overnight sessions. Price will accumulate, and then when market opens, when New York session opens, price will want to manipulate everything we've accumulated, and that could manipulate to the buy side or the sell side. In this case, we're manipulating to the sell side. After manipulation, you have distribution. Now, distribution can be in either direction. It can be in the same direction that we manipulated, so sell side, or it could distribute in the opposite direction. The direction that we distribute is based on what our daily bias is. And if my daily bias right now is bullish, which I feel confident in, I'm looking for price to distribute buy side. So we manipulated sell side, I'm hoping to distribute buy side. And now for a confirmation on where to enter in this distribution, I'm going to look at a lower time frame. So I want to look for a low time frame bearish fair value gap that we disrespect. And the equivalent of us disrespecting it is having a bullish candle slam right through the bearish fair value gap, almost absolutely disregarding that a bearish fair value gap was even there, right? For example, having a candle body close above this candle body right here, disrespecting the bearish fair value gap. And the second that happens, I don't need any more confirmation. Everything has lined up for me. I have my one-day bullish fair value gap, I have a bullish SMT divergence, and I have a confirmation on a low time frame. That's really all I need. And then from there, I will either target the next key level, hoping for maybe a 3-to-1 ratio, or if I see that there are some bearish confluences in the other direction, I'll just target a 1-to-1. And those 1-to-1s have a higher likelihood of hitting, obviously. But yeah, we're gonna have to wait for this. What we might enter on is a 5-minute bullish fair value gap, assuming that this candle body does not fill this gap in the next 3 minutes and 30 seconds. And if it does, I'll look for a lower time frame one, right? That's just how it works. I don't see anything on the 3-minute. I don't see a gap on the 2-minute. I don't see a gap on the 1-minute. This 1-minute is more of a continuation because the candle body on the first or third candle has not closed within the wick of the second candle, the same way this one has. The candle body on the first candle has closed within the wick of the second candle. That is one of the factors that make a fair value gap actually valid. Right? What makes a valid fair value gap is important if your strategy for entries revolves around inversing a fair value gap. So you have to be able to recognize that. So I'm going to keep it on the 5-minute. Now my IFVG break I'm looking for right here. And we're just going to have to wait for that. Another reason why I like longs is because on the high time frame, for the Fibonacci tool, right? You don't want to overuse this tool, and you don't want to put too much weight on it either. Even if we don't respect it, I'm going to take all the other factors into consideration. But we have candle body closing within the golden zone, and the golden zone is this level right here. We have candle body closing within, wicks rejecting off into, and now in this, with 22 minutes left on this 4-hour candle, I'm not sure how this will end up looking, but hopefully we respect it and I'm able to get my long entry in. Now, this golden zone Fibonacci tool is a little different than the equilibrium tool. Now, the equilibrium tool is going to have its golden zone a little bit lower than what you see here because it's looking for the 50% and 61.8% range. This one is more of a take profit tool, right? It's showing you more of a continuation pattern. Like if price has its retracement down here and it rejects off into this golden zone, you can take TP at these levels where I have the green lines drawn. But if we're looking for standard equilibrium Fibonacci, then just to, I guess, show you where that would be, it's right here. This is the 50% and 61.8% range. Now we could retrace back into that zone, but I'm not really looking for that. I mean, if price ends up retracing back into the zone, it'll probably happen in the next 20 minutes of this 4-hour candle. And then we have a massive bearish 4-hour candle, which in that case, why on earth would you take longs when you have a full body 4-hour candle? So I'm just going to delete that for now. I'm just going to stick with my daily bias as bullish. And now what we really need is confirmation. So if this 5-minute candle is going to finish in 22 seconds, I'll let it finish. And and I'll wait for a potential candle closing above the body of this second candle. And if it doesn't, I'll resume later and we'll see if there's a better entry or no entry at all. Okay, we're kind of, I guess, low time frame flushing right now. Decent chance we take out this low. That might be the manipulation we're looking for, and then we could distribute buy side. But this is a pretty deep bearish move right here. I'm not loving that. I guess while price moves over there, let's just zoom out on the 15-minute and look a little macro. This is that bullish flag, right? This is that bullish flag that we are respecting. We are rejecting on the sell side, on the buy side. This was a large move on Tuesday, Wednesday, where we kind of grabbed all of this sell side liquidity and then started a proper uptrend. So I think this is where we had a change of character in the market. We were bearish and now market structure is bullish. When NQ will break out of this bull flag structure, I'm not sure. That could happen next week. It could not happen at all, right? It's interesting because ES has. So I ideally like to see us break out because it's a bull flag, right? But again, we're not going to put too much weight on that. I am looking for, like, this 15-minute time frame is going to end in 2 minutes, and it's going to be a full body close maybe, right? That's a lot. What this will give us, though, is a 15-minute bullish SMT divergence again, right? Because ES in relation to that has taken out this high. So I guess there is a bullish SMT divergence here. There's about to be a bullish SMT divergence here and then a bearish one up here. Assuming that this 15-minute takes out this low. If this 15-minute doesn't take out that low, then we might just have a huge bearish SMT divergence because ES has taken out this 7 a.m. high. So then, honestly, we might have a bearish SMT divergence and then we might have to enter a continuation short trade, right? This is us adapting to what the market's giving us. So, I mean, look, that is possible. I don't love that, but it's something that could definitely happen. Could be a golden zone continuation to the sell side, but yeah, because look, we're not going to have, at least right now, it doesn't seem like we're going to have a bullish SMT. NQ is not going to take out this low, and ES hasn't taken out this 1:30 a.m. low, but what has been taken out is this 7 a.m. high by ES. So we have a bearish SMT. That's what we have. We have a bearish SMT, and by just looking at this 15-minute candle, it's pretty high volume bearish. I don't know, or I don't think we'll be bullish. If I'm being honest, it just doesn't look like it. What we still can't deny, though, is this much larger 1 hour, 4 hour bullish SMT divergence, which I am going to take into account, actually. I don't think I would enter shorts on a retracement here. I still believe our daily bias is bullish. I just need further confirmation. We're going to wait till I see kind of a bigger shift in price. And until then, I mean, we're going to let price ride. Okay, we have a 5-minute bearish fair value gap right here. that I'm looking to inverse. If we inverse that and we have a 5-minute candle body close above the second candle in this bearish fair value gap sequence, I will take longs. I will take longs. I will target a 1-to-1 ratio. And I could even sell, I could probably sell somewhere at this key level. Here's the issue that a lot of people kind of fall into, and I do as well, is that you'll be scared to take an entry here at this 5-minute bearish when there's another 5-minute bearish up here. And when there's a incoming 15-minute bearish up here, you're like, what if price rejects from this 15-minute bearish fair value gap and we end up taking out sell side? What if it ends up looking something like this? Then my long position would have been absolutely pointless because I'm going to get stopped out. And I don't know if I'm going to get stopped out because we have a 15-minute bearish fair value gap here and you want me to take a 5-minute entry. But you're thinking about the high time frame only in the negative sense. But why not think about the high time frame on the 1 hour, on the 4 hour, where we're in a 1-day bullish gap, where we have a 4-hour, 1-hour bullish SMT divergence, where macro is actually driving price to buy side, but because you're worried about entering, because you have a fear of missing out, because you don't want to, you're not ready to risk the capital that you've already mentally set aside, because you're not ready for that, you're going to find a reason to not enter that trade because, hey, there's something telling me it's going to go in the opposite direction. But what about everything on the higher time frame that's telling you, hey, no, it's going to follow your daily bias? So you just have to remember that when you're entering trades, not only in this case, but just for all your trades. And otherwise, you're going to miss out on entries. You need to be reactive. You don't want to be impulsive, but you have to be reactive with your entries for what you see, not what could happen. And 9 times out of 10, it'll play out if you follow that strategy. In this case, though, I mean, we're not taking out this high. I mean, it's very possible. I mean, the 1 hour ends in 7 minutes. This could be a sell day. This could be a sell day. Yeah. Yep. Yeah, maybe might want to retrace into that 50% range. Who knows? Might want to retrace into that range. Yeah, this is it's still that 5-minute gap we have to work with. Now, let's say we have to change the narrative and we're looking to enter shorts, right? Let's say that's what we have to do now. Off rip, I could see all of this descending buy side liquidity that price might want to take out in an impulse move like that, grab inefficiency, grab liquidity here, and then continue bearish. That is something I could see happening, especially with this gap right here on the 1 minute, which I believe is also on a higher time frame. Yeah, you have a 2-minute bearish order block candle right here. You have a 3-minute bearish gap right there, and you have a 5-minute bearish gap right there. And then you will have a 15-minute one in 5 minutes. So that's something that could happen. Yeah, that's something that could for sure happen. So because of that, I will mark this gap right here. That we could very well retrace into. looks about right. Yeah. We have a 2-minute order block candle here as well, so I kind of want to have that marked. So yeah, price could easily pull back into that zone. If I were to set up Fibonacci, right around that area is the 50% range. So it's possible. It's very possible. It's tricky because we're about to have a 1-hour bullish SMT now. We're about to have a 1-hour bullish SMT. So it's like this candle right here on ES has taken out this high, but it hasn't on NQ. And this candle right here has taken out this low on NQ, but it hasn't on ES. So ES is bullish, but NQ is bearish. Now, I don't really know. It's a little tricky to trade in a circumstance like that, and that's why it's important we look for confirmation, but we're just gonna have to see how price reacts. At the end of the day, it'll come down to that. You know, on a low time frame, when we draw down, how are we reacting to this 15-minute bearish fair value gap? Are we respecting it? Do we have a lot of full body bullish closes? You know, I mean, are we inversing to the buy side? Are we inversing to the sell side? We're gonna have to look for confirmation. And I'll wait till 10 a.m. It's definitely after 10 a.m. we will see a move in one direction or the other, and then we'll enter based off that. Okay, 1 hour. It's gonna finish in 50 seconds. This candle body is a decent chance it closes above London lows. And that is a great sign. That is a great sign that there's still potential for bullish price action, which in that case, yeah, especially with this massive bull candle, if this candle body closes above this second candle at the end of these 20 seconds, I'm entering longs. So now let's define our risk really quick. This would be our stop loss. Our entry would be somewhere around here. That's 115 points. 115 times 2 is about 230. 500 divided by 230, just over 2, which means we'll risk 2 micros. We'll risk 2 micros. And that will follow my defined risk, which is 500 profit and 500 stop loss.
Order filled.
Entering longs. Candle body closing above this second candle. Stop loss down here. Take profit up here. It's a 1-to-1 ratio. This is the true trade of patience. Seeing all of this bearish price action, that could be discouraging to follow your daily bias, which was bullish. And at the end of the day, we are in a 15-minute bearish fair value gap. So we still don't know. We still don't know. Price could flip on us entirely. But I feel pretty comfortable with this, especially with the 1 hour. This 1 hour candle absolutely sweeping London lows, grabbing all of this sell side liquidity right here, all of these 1 hour lows, grabbing all of these 1 hour lows. There's still being a massive 1 hour, 4 hour bullish SMT divergence, and us being within a 1 day bullish fair value gap. All those reasons combined, followed by a confirmation of a 5-minute inverse of this bearish fair value gap with this full body 5-minute candle. Almost full body, right? Pretty high volume. Inversing this bearish fair value gap, right? Closing above the second candle in this sequence. That is my confirmation. Those are 4 factors that are confirming to me we are bullish. I don't know for how long, but enough to carry out a 1-to-1 trade with our defined risk. I think so. And we're just going to wait it out. That's it. I will say what is kind of discouraging me in this position is that we still have this 2-minute order block candle that's bearish, which we are respecting. And for the 3-minute, the proper inverse would be closing above this candle. I saw it on the 5-minute, this candle body close above this second candle right here, which is why I felt confident in entering longs. But I don't know, 3-minute, 2-minute, we are respecting this bearish order block candle right there, which is why it's a little tricky. 30-second, we kind of inversed right here, this 30-second bearish. I kind of want to reverse my position. I kind of want to reverse my position. Thing is, we already entered. That's important. I don't want to reverse it. I already entered my trade. We're gonna let it play out. We are going to let it play out. I see a 5-minute bearish fair value gap. That's the highest time frame. We inverse that. I should not care what the 3-minute and the 2-minute are showing, even though we're in a 15-minute bearish fair value gap right here. That's all right. We'll let it play out. We'll let it play out. The takeaway here, I guess, is look for crossovers on multiple low time frames. Like I saw it on the 5-minute, but if I see contradicting information on multiple lower time frames, like the 2-minute and the 3-minute, then what I see on the 5-minute might be invalid, especially if we're in a 15-minute bearish. But I felt confident because on the 1 hour, we had a candle body close above these candles, grabbing liquidity in all directions, taking out London lows. So that's why we're in this long. We're going to let it run. Decent chance it takes out our stop loss. If not, macro bias is playing out, and hopefully we'll take out TP. Okay, we just got stopped out. Price immediately flushed from right here. Hit our stop loss. It's fine. I'm opening up Financial Juice, checking for any news, but the servers are down, so everyone's wondering like what on earth happened. There's no major news event, but I guess something happened. Stopped out. That's fine. We were starting to tread back up. We might start now after grabbing this liquidity, but that's it. That's the trade for the day, and we'll take another shot tomorrow.